Hey guys, Philip from Black Bull Markets here. In this video I'll be taking you through how to trade with the Elliot Wave. I'll show you where to enter in the trade, where to enter in the wave, where to put your stop losses, and in some cases even where to put your take profit. The Elliot Wave is a very interesting technical analysis. It is one of the only ones that can determine when the trend will turn around, and it teaches and it can show you how long the trend will last. So I'll take my face off of the screen so you can see a bit better. So let's dive straight into it. So in the Elliot Wave, there are 5 basic patterns you need to learn. But the one we're going to look for is the impulse wave, which should be very easy to recognize in the market, as it is the strongest moving wave in the market. I'll take you through some of the rules you need to need to learn to recognize your impulse wave. So the rules here, there we go. The rules is that impulse always subdivides into 5 waves. I'll show you this later in some of the next slides. Wave 2 never moves beyond the start of wave 1. Wave 3 is never the shortest wave, but it doesn't have to be the longest wave, but it can't be the shortest wave. And wave 4 never moves into the territory of wave 1. So this is what the complete cycle looks like, guys. This is just a basic drawing. So this is what we have here. I've indicated the green to show you in a bull market and the red to show you in the bear market. So you can see here it starts with 5 waves. This is actually an impulse wave with its correction, so we call this a full cycle. It consists of 8 waves, 1, 2, 3, 4, 5, 6, 7, 8. We will actually be labeling them 1, 2, 3, 4, and 5, and then for the corrective part we'll label that A, B, C. So this is actually the wave that we are looking to trade right here. This is the one where you make all the money, guys. So I'll show you a little bit more in detail in the bullish, a little bit more detail in the motive phase. The motive phase is the phase that actually determines the trend of the market. So as you can see here, this consists of 2 main patterns, which is the impulse, the one we just looked at, and the diagonal. So I'll show you the impulse first and break it down a bit. So again, this is the basic impulse wave. This is where we make our money, guys. Nice long legs to trade, lots of pips to be made. So impulse this diagram is just showing what it would look like in a bullish market. If it wasn't a bearish market, guys, you just turn it upside down. So I'll show you a bit more into detail. So guys, in an impulse wave, all these impulses consist of smaller versions of itself. So in this wave there should be 5, and there's 5 over here and 5 over here. But we'll get into that in more detail in next videos, where I'll explain a bit more about the Elliot wave. So this is the impulse wave broken down. You can see here 5 waves up, 3 down, 5 up. Don't worry too much about this. This is a corrective pattern. It's just I just drew this diagram so you can see what the market, it kind of simulates the market a bit better. But this is again in perfect condition. So I drew the 3rd wave as the longest, because the 3rd wave is usually the one that does extend. So the 3rd wave is the one that we want to trade, guys. This one makes the money. This is really, really the money wave. I cannot tell you how important it is that you need to catch this 3rd wave, guys. And that is why I love trading with the Elliot wave, because it just identifies for me where I can make the greatest profit, guys. It just shows me where it kind of lets me see into the future almost, to show me where the strongest trends in the market is. So again, I'll just label this for you: 1, 2, 3, 4, and 5. This is in the next pattern we will look at, so I'll show you that right now, which is a diagonal. So a diagonal can only occur in waves 1, waves 5, and wave A. Wave A, wave B. That's wave C. Sorry. Don't worry too much about the wave A and wave B. I'll talk to you about that just a little bit later in this video. So impulse wave. So the diagonal is actually the only wave in the direction of the trend that does not consist of 5 waves up, 3 down, 5 up, 3 down, 5 up. So I'll show you here what I mean. So you can see here it consists actually of 3, 3, 3, 3, and 3. Just to make it a bit easier, I drew these lines over here just to show you it kind of makes this diagonal shape. This signifies a lot of weakness in the market. So the most common place for this to occur is in waves 5 or waves A, which does indicate the end of the trend, or the end of the move. And we can always expect a nice big drop. So I'll show you how to trade this pattern as well which is also a very, very important pattern to trade in the Elliott Wave. Just out of curiosity, guys, I'll show you just something interesting here. In this, you can actually, what it does look like is actually a wedge or a pendant, guys. So the Elliott Wave just helps you identify a bit better on what it is and helps you to determine when that pattern is going to end. So it helps you to enter it a bit earlier as well. So the next ones we're going to look at is the corrective phase. So the corrective phase is the part that goes against the market. So it consists of 3 patterns: the zigzag, flat, and the triangle. Starting off with the zigzag. The zigzag is your most common pattern. So in the zigzag, this is actually the only one of 2 of only corrections that you can trade, because you want to trade the C wave over here, which always, most of the time, it is a very nice long outstretched wave. I'll show you just here, but broken down. Don't worry too much about this. This is just to show that the direction of the trend, and that the correction is in the opposite direction of the trend. So you can see the ABC pattern, or the zigzag. So I'll just show you ABC here. My technical team will add on the labels, hopefully. So what you can see is the ABC consists of 535. This is the only corrective pattern that consists of 535 waves, guys. So it is quite difficult to trade the A wave unless it occurs after an ending diagonal, I have found. Because again, the ending diagonal signifies a strong turnaround in the market, and we can always, well, most of the time, expect a zigzag correction afterwards, an ending diagonal. Wave C is a wave that we always want to trade in a zigzag and a flat. The wave C is the only time we don't trade a wave C is in a triangle. So I'll show you that a bit later. The next one I'm going to be looking at is a flat. So like the zigzag, it consists of almost a zigzag pattern as well, but instead it kind of corrects in a sideways movement. If you guys, just another interesting thing, it kind of simulates a consolidation in the market. So you can see here where we have the flat now. So the flat consists of 3, 3, 5. So in a zigzag and a flat, just to make it a bit easier to remember, guys, a zigzag and a flat, well, the C waves always need to consist of 5 waves. So the C wave always has to be an impulse or an ending diagonal. So again, in a flat we can trade the C wave. I'll show you that a bit later. I'm just taking you through the patterns now, and then later in the video I'll show you how to actually trade these patterns. The next one we're looking at is a triangle. A triangle is a pattern that usually takes a long time to complete. This is where people, if they don't know how to trade the Elliott Wave or don't know about the Elliott Wave, tend to get very, destroys their nerves. This is why I also enjoy the Elliott Wave. It kind of helps me to tell me, okay, I need to stay out the market when I can re-enter the market. So broken down, the triangle again is 3, 3, 3, 3, 3, guys. So each leg consists of 3 waves. Just the interesting thing is, again, guys, the triangle, to determine where these waves can end, usually you can use your Fibonacci retracements. So wave C is always, most of the time is 61.8% of wave A, and then it continues as that. So wave D is then 61.8% of wave B, and wave E is then 61.8% of wave C. So that's just don't worry too much about it, guys. That is just if you are more interested in the technical side of Elliott Wave, but for trading it, you don't really need it. The only thing you need to know about a triangle for trading is that wave E can never go beyond the end of wave C, guys. So that can never happen. This is where you can put your stop loss. I'll show you later in the video. So trading the Elliott Wave, guys. So trading the Elliott Wave, once you pick up the patterns and once you've trained your eyes to pick up these patterns, they are very profitable and very easy to trade. I use them personally myself. I combine it with technical analysis. I did make a technical analysis video as well. If you want to check that out, it's on the same page. It's called How to Trade Profitably with Technical Analysis. Have a look at that. So I use Elliott Wave and technical analysis to combine in my trading to make it more profitable. Sorry. So let's get into this, how to trade with it. So start off with the impulse wave, how to trade your impulse wave. We almost never trade the first wave because the first wave always is a bit more unsure in the market. People don't really know if the trend's going to turn around or what's really going on. A lot of people think that it's a corrective. So a first wave tends to be a little bit messy, not as nice, not as stretched out as the wave 5 and wave 3. So we try to aim to trade wave 3 and wave 5. I'll show you how to trade wave 3 right now. So you can see coming in from a downtrend, we have waves 1, waves 2, and we kind of trade it almost like a double top like I showed in my previous video. Just something interesting, guys. The reason why I use Elliot Wave as well, and not just technical analysis, because if you guys could spot this, there is actually a head and shoulders forming, and you can see it was a false head and shoulders, so it didn't actually continue in the downtrend like the analysis is supposed to do. So this is why I use Elliot Wave. You can see if you can count 5 waves coming up and 3 waves coming down, you know the trend is about to turn around. So in the Elliot Wave, if you see 5 waves on the opposite side of the market, in the opposite way of the market, or the opposite trend, you know it's about to turn around, or there's a big move coming in the other direction. So you can put your entry order, say, and this is a bullish market, you can put your buy stop right above that first wave of the third wave, or right above that first wave over there, and you can put your stop loss right underneath the start of the first wave. Or if you want to be a bit more conservative, you can actually put it right over there. I prefer to put it here just to give myself a little bit more movement when I trade the Elliot Wave, because this could still continue on to make a more complex correction, like a flat. So we wait for that break over there, we enter here, and we trade the third wave. I'll show you how to trade the third wave and the fifth wave. So this is how to take the best out of the Elliot Wave. So you can see I've did the complete cycle over here, 1, 2, 3, 4, and 5. So you can actually, like I showed before, you can enter here, trade that third wave, wait for the pullback. If you want, you can take your profits somewhere around here, or wherever you have set your take profit levels. Or what you can do is you can leave the trade in, wait for it to retrace, count your waves. You can see 1, 2, 3, 4, 5 with the extended third wave. Wave 4 came down. You can put your new order right above the tip of the third wave and trade the fifth wave. So you have got now 2 orders that you've entered in the market, making as much money as possible out of this trend. And then again, after fifth wave, you can see it consists of 5 waves as well, and that can then indicate where to put your take profit, or where to take your profit, so you can take the most out of the wave. So whenever you see 5 waves in the fifth wave, guys, you can determine that the trend has started to come to an end and start to look to take your profits. The next one we'll use is to trade the diagonal. So the diagonal, like I said, if it's in a fifth wave or in a C wave, it shows, or it indicates that there is about a strong reversal about to occur. I'll show you how to trade that right here. So you can, just a quick thing, guys. This is also a rule for a diagonal. Now all the waves need to decrease in size as they go for a contracting variety. There is an expanding variety, but it's not as common. It's almost we almost never see it. There was only 1 or 2 cases ever picked up about an expanding diagonal. So for this one, we have the first wave has to be the longest, third wave in the middle, and then the fifth wave has to be shorter than your third wave. So to enter this trade, guys, you will actually trade it against the diagonal to trade that big move to the downside. So what you can see here is we've put a trade here, and we've put our stop loss just above the 100% mark of the third wave. As you can see, if it does make sense. Guys, if you've got any questions, just please contact me. My details will be below. If you have any further questions about this, or if this video does not make a lot of sense to you, just feel free to ask me any questions. Getting back to it, you can see I put my stop loss just above this 100% mark, because if it does break that, you know your count was invalid and you need to recheck your count. So this could have been something else, maybe a corrective pattern, and you need to recount your internal waves as well to see what it actually was. So that's how we put it, and we wait for that downtrend. So usually if it is in a first wave, this diagonal, you can expect the pullback to be quite strong, like I said, a zigzag, potentially coming down to the second wave of this ending diagonal. So in the leading diagonal in this case. So that you can put your take profits right around here if it is in your first wave. But if it's in the fifth wave, we can just trade that all the way down in either a trend reversal or a big correction. So how to trade your zigzag? Your zigzag is similar to trading your wave 3. You can see it's quite similar. It's pretty much just that picture flipped around, coming down with your A, B, C. So you can see it's almost exactly the same way traded. So we're just waiting for that break of the end of A, coming back from the correction of the B wave, You can put your stop loss up here or either down here if you want to be a bit more conservative, giving it more, making sure you don't, managing your money a bit better. So again, you can see here, there was your head and shoulders, a false head and shoulders, not making the whole move down. You would have most likely lost money here. So this is why, again, I love trading with the Elliott Wave. Next one you can see is your flat. So in a flat, we don't actually trade the A and B waves because they don't have as much potential as our C wave. So I'll show you why. So in the A wave, you can see it consists of 3 waves. So these tend to be very complex and take a lot of time. You can trade it if you want, but it can work on your nerves because it will be a complex, well, most of the time it's a complex correction or complex move, and it's just a lot of time spending on a sideways consolidation. So we will look to trade the A wave, which we know always has to be an impulse wave. So you can see you can trade it almost similar to a double top, waiting for that bounce on the line. So if you do know about technical analysis, you can see it does form a double top like structure, and you can trade it to the downside. So this will most likely be where if you go on a bigger cycle, this will be where your third wave was or your first wave was, and you can trade that big move on the downside on a smaller time frame. So if you were trading, say, on the daily time frame, you can actually trade this maybe on a 30 or an hourly time frame, just for a quick profit. So I'll quickly show you what it looks like, what these patterns look like in a real-time market. And so just coming here to our Black Bull MC4 server. So you can see I've labeled everything here. So there is a flat, guys. You can see it doesn't quite reach it. This is what we actually call a running flat, where it does not quite reach that A level over here. So you can see there's our waves 1, wave 2, wave 3, wave 4, and wave 5. And you can see after that 5-wave incline, we started this drop. This is the Euro-US dollar daily. So you can see we've had a zigzag drops after this, and I'm expecting it to come down to around about the level of the 4th wave, which was, about the 1.15 level. And you can see also in this 3rd wave, which has extended, like I mentioned before. The 3rd wave is, in this case, the longest wave. You can see it consists of 5 waves as well. Inside that, our 3rd wave also extended, along with a 1st wave extension. So like I showed before, you could have entered here, putting your new entry order right over there, and putting. So you would have entered. You would have been entered in the market here. But if you put your stop loss at the start of wave 1, you would not have been stopped out. It would have retraced. You just need to kind of hold your courage a bit on this one. So it would have retraced, moved sideways for a bit, but it eventually gave you this beautiful, strong move to the upside. And again, like I showed, you can see your strong ABC correction, very, very obvious, consisting of 5 waves as well. And over here, 5 waves as well. 1, 2, 3, 4, 5. You can see, and then okay, you can put a new order in here, right over there, and trade that to the upside as well. So that is it for this video, guys. That is just the basic trading of Elliott Wave. Elliott Wave is a bit complicated if you were to dive into a bit more. I will be making videos later on, or we will be holding seminars as well later on at some point, teaching you more about the Elliott Wave and what it is and where it came from and how to actually identify it better. So like I said, that's the end of this video, guys. If you've got any questions, please feel free to contact me. My details will be provided below, or you can just hop online and chat to our friendly live support team at blackbullmarkets.com. Alright guys, have a great weekend and safe trading.